All right, folks, here we are. I wanted to make a quick video for you guys because I put out that eBay signal really without explanation, and I wanted to circle back and show you guys what we're seeing and why we got into what we got into. All right, so first off, what we have, you guys don't see this, but this is every day, you'll see me at the end of the day, we run a scan for inside bars. So right now there happens to be 126 of these lining up today. Those will go away as highs and lows are breached in the afternoon session, or if they're not breached, they'll stay in the scan. You do it at the end of the day with closing prices. Then I take this information and I move it over to the spreadsheet. And basically, we know what the premise of the inside bar is, right? Let's bring eBay in here. This is the daily chart on eBay. So the inside bar is a 3-bar setup. First bar here, you can call that the mother bar or something like that. Then you have the inside bar, which is a consolidating technical pattern where you have the low of day 2 higher than the low of day 3, and the high of day 3 lower than the high of day 3. Then you take the high of day 2, which here is 36.91, and you take 101% of that price. So a 1% move above the highs, that's your trigger price. So you can see here in eBay, not EA, eBay, that given yesterday, this is the last price, this is the change on the day, this is how much is traded today, it's the high from yesterday, the low from yesterday, and the close of yesterday. So if I'm looking at a buy, you can see that here that I take the high of yesterday and I multiply it by 1.01, which is 101% of that high. 64.48, 37.28 is our high, is our trigger price. So when we ticked, and we're trading 37.23 right now. So when we ticked 28, that was our trigger to buy. So then it just becomes, okay, just like anything else. Well, now we figure out what we want to do with this. All right, so if we were trading 37.28, and we're going to go out to regular April, and the implied volatility for that is about 23%. So we're going to be targeting, and actually vol has gone up a little bit. So vol was like 22% when we did it before, but we're going to be targeting somewhere between 39 and 39.60 or so. Well, we go out there. What do we have for strikes here? Get that out of the way. What do we have for strikes here in eBay? We only have single strikes. So if we don't want to target 40, that's too aggressive. So we targeted 39, and then really the only thing we could do was the 38.39 for 30 cents. So if we do the 38.39 for 30 cents, then it's very easy to figure out what our reward to risk is. Let me clear these guys out here. 38.39 call spread. Buy the 38s, sell the 39s, and we paid 30 cents for this. This is going to max itself out at 39 or higher with a break-even price of 38.30. We can make $1 on our spread. We pay 30 cents. For a net of 70 cents is our maximum reward. Maximum reward of 70, maximum risk of 30 gives us 2.33 to 1, right on the lower end of what we would deem as acceptable reward to risk. But we are targeting a very conservative area, right, where the full standard deviation is 39.65, and and even the 59% confidence interval is 39.38. We're only targeting 39, so that's why I was okay with it. So that's what we have here. So we have the inside bar that triggered. We have an ascending Donchian channel. Everything looks bullish, and these highs here are like 30, what is this high here? 39.14, and we're only targeting 39 to max out our spread. The hull doesn't play a role in an inside bar setup. Be nice if it was up, but it's not necessary. All right, so you guys got filled in that, and we're just holding it. And we're trading basically right where we got in. And so we'll see what happens with that. Any questions on that? Just wanted to give you guys the rationale behind what we were doing. If not, then I will get this video put together for you guys and get the link. All right, thanks a lot.